Yeah, Wednesday. What's up, everybody? Wednesday morning. Hope everybody's having an amazing day. Had a great Labor Day weekend. It's our daily market commentary. I know I'm coming at you a little later than normal as we are getting rolling this morning. And a little bit of a downward movement we're seeing in the S&P. NASDAQ not quite as much, so let's go ahead and dive in with our big picture market perspective, starting with the S&P 500. So looking here first at the S&P, we are seeing that there was a shift of momentum, a bit of a rollover. Markets have come down a bit from the highs. We're about 30 points off the highs, and so from there, our 4 hour has given us a lower low, not officially a lower high as of yet, but we are seeing a little bit of a rollover at this exact moment. And so, if you are a candle-to-candle style trader, I think there's a good opportunity to trade this on a candle-to-candle short position. We do have a nice little wick over wick area right here, which was formed yesterday. I think that area sets up for a really nice wick over wick level if price comes back into there to look for a potential short coming back into this zone. Switching gears over a little bit and taking a look at the NASDAQ, we see that the NASDAQ also on a 4 hour chart has shown a lot of momentum weakness. We did have a little 15-minute day trade opportunity yesterday. We talked about this could be an area for a good little 2-to-1, and it did give you a nice 2-to-1 out of that level after a confirmation short, and then came back through and blew through that level. And the NASDAQ not as weak as the S&P in general, so certainly still a breakout trade exists above the all-time high. Our belief would be that based upon the fact that the NASDAQ is still a bit stronger, is that if it's going to fall like the S&P has fallen, it'll fall a little bit later, and you might be better off waiting for a little bit of a breakdown setup below maybe this area. Not a whole lot of great levels down below us from a demand standpoint. This area here is okay, but the fact that we bottomed out right at the London Open tells me that if we come back into here and there's basing, you could look for a potential breakdown below this region here, although that's still about 50 points away from where we are right now. But if you're going to look at a short, I think that the S&P is probably the better one to go with on a candle-to-candle setup. Moving over to crude oil. So looking at crude oil, we can see that we had yesterday this little level here that I thought, hey, this is going to make for a pretty good short. And the markets did come into that level, and we were looking at it yesterday morning. I think actually we looked at it on a 15-minute time period yesterday. And it did come back into that level and move away, but then just completely cut through it right at the market open. And sometimes this happens, right? It was a small stop out on this position. And so I'm going to get rid of these lines here. Certainly that level did not hold. Which kind of stinks, right? I mean, everybody hates to get stopped out because I anticipated that there was a really good chance we could make it all the way down to the 66.22 area if that supply level held. Obviously, it did not. And so now I think I'm just going to hold off with really no trade. I want to wait just a little bit until I get a more definitive trend direction. If I'm going to get stopped out, I want to get stopped out on 15-minute levels. I don't want to get stopped out on the stronger hourly zones. But I don't have a really good hourly level in order for me to lean on here. We may have an opportunity for a breakout back up above here with a bit of basing, but of course I have to get the basing somewhere in this region here. And then last was gold. Looking here at our gold level, we talked about gold on Friday staying in this range, and it's still in the range that we'd spoken about. But we did have a bit more movement yesterday. Our 15-minute supply level, a little bit of a drop-based drop, gave us a really nice retest, and then price came down really close to our hourly level of demand. So now this supply level's got to go. We can't use this one any longer as it traded all the way to the top of that level. And I would say that our next area might be a little bit of a resistance point around 1810. I don't have a clean supply level there, but I do have old support that can act as new resistance. And so if that old support does indeed act as new resistance, you might look for a decent short coming off of that area. I mean, if I just draw a line across here, that's That's a fairly well-used zone, that right around 1810. So I think that somewhere in here you can look for a potential candle to candle setup. This is where I would look for a candle to candle short trade as a potential entry. And we're getting up to there fairly soon. So once again, I'd need to have a reversal candlestick pattern for that trade to make any sense. All right. So those are our four major markets. Like I said, not a whole lot from the perspective of strong trend directions, but this is very common for this time of year. Let's see if we do continue to get a little bit more of a drop down in the S&P, followed by what we would see happening in the Nasdaq. As far as a stock of the day, I want to take a look at Square, and I looked at Square recently. Square was one of them that we had looked at a couple of days ago, and it's still in that pinching pattern. We looked at it on the 18th. And when we looked at it on the 18th, we looked at it on August the 18th. We looked at it for a potential bullish setup. Now, in that time, whoops, let me maximize this. In that time since we have looked at it, which was this date here, we didn't wind up getting a higher high, right? I need to get the higher high off the candlestick reversal pattern because I looked at it after this doji day that we had. And we hadn't gotten a true higher high, but we've also not really come apart either. And so looking at a position like this, I have clearly a wedge that's being formed, a little bit of a wedge that's being formed. And this stock has been shown, when this has happened in the past, to be a pretty big mover. Now, the downside is that it can move either direction. But now that I've got a little bit of a triangle pattern that's formed here, I can trade the breakout one direction or the other. I still think that there's more bullishness, more reason to be bullish than there is to be bearish, but certainly I'm willing to trade either direction when I've got this much pinching. So just keep this area in mind. If you wanted to trade this one, I would think that options would be your best bet, and your range would have to be somewhere outside of those areas, somewhere outside of that 278, 260. So you've got, it's still got to make some moves in order to get there. But I think that you could have a breakout range one way or the other. 1, 2, 3, 4. We've got 5 touches. And typically on these triangle patterns, a measured move would be a breakout from the second touch to the opposite side. And so either one of those would be a relatively good move. Either way, the problem is we just don't have a clear direction until the breakout occurs. So keep this one on your radar. Watch for the breakout. See what it looks like. I'm going to throw a quick study on here. I want to see what our CCI 100 is telling us. CCI 100 is just kind of hovering around the top line, which is really not a signal one way or the other. It's not giving me really a strong indication, but just keep that one on your radar screen for today. So that's all I have, everybody. I hope you guys have a great day, and I will talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.